The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Noon from TFNN. Welcome to the November 28th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. And you do that by sending me an email at steve@tfnn.com. Inside that subject heading, please put radio show question, of course, well, inside the Tiger's Den. Just about any ping will do, Vasily. So let's go ahead and get to this show started. Of course, this is terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 184 points, 23,764 is the print. S&P's up 19. NASDAQ's up 16, only 0.25%. So NASDAQ is trailing. Not a big deal. Russell 2000 up 0.7%. She's trading at 1523. Semis have finally turned green, up by 2 points. Gold is off 2. Silver's off 23 cents, down 1 4/10% to the downside. To the upside, leading the charge, dollar-wise, individual stock-wise, it's a Bitcoin Investment Trust up another $240. Thor Industries up 18 or 13%. AutoZone up 15, 2.5%. Buffalo Wild Wings on the buyout up $9. Tech Data Corp, up 8.5% or $8.5 or 9%. Alta Beauty up 7, 3.5%. To the downside, it is Regeneron Pharmaceuticals struggling, leading a dollar-wise $11, about 3%. Public Storage off 6.50, 3%. Momo Inc. down 17%. Mo down $5. Google is off 5. Stamps.com off about 4.50 out there. Of course, I want to look at what you want to look at. I don't see any requests just yet. So let's go look at these markets. Let's go figure out what they're doing or what data points that you and I need to focus on and pay attention to today. That level is going to be, drum roll Johnny, it's going to be coming to you and I from the Russell 2000. TF, that's the, if you're watching us on TigerTV, that's the panel on the very right-hand side. It does have a 10-minute delay on it, but what you're going to notice, well, you'll notice it probably if I just simply make that my entire screen out here, you'll notice a brand new daily profile. The structure of this box, bearish. The box itself, bullish. Why bullish? Because it formed above the prior box, but the center of that line, center line of that box, 1514, much closer to the top, 1526. 1526 becomes your line of resistance. We, in essence, have hit that today when it got a 1525.90, I think, 1525.60. So that's resistance. Now, the key, does that mean you go sell the TZ, or you go buy the TZ or sell the Russell 2000? No. Just means that's where resistance is. And brand new profile today, if you see it close above 1526, it just says don't even think about it. fact, at this stage here, the fight or the struggle inside the Russell is the longer-term traders are trying to take over the daily guys out here. And the reason I say that is because if we look at the longer-term traders, we take a look at those new profiles, weekly profiles that formed now it's been a month, prices above 15.18. So intermediate term time frame, of course, it's only Tuesday. But last week, even with the shortened holiday week and with Friday trading, we did see a close above the top of that box. So intermediate term, the message here is price wants to continue higher. That just means, like any competitive sport, baseball, well, football more so than anything else, you just simply know where the defense is at. And inside and out of daily, that's the only defense that is out here. Otherwise, the Bulls are running towards the end zone, getting ready to do the happy dance. You are above the weekly profiles in the ES is still the weekly charts now we're looking at. You're so far north of resistance inside the NQ. They're playing on another field out here. Yeah, even though there's a lack of movement out here, you take a look at where it's priced above resistance. It's just cruising out there. So it can take a little bit of time off or some of the last few hours off inside the Dow, which has really been, a brand new box that formed last week. Kind of a neutral box, neither bullish nor, well, bullish is the only message because it formed from a weekly perspective above the prior box that was out there. But with regard to the structure, just really neutral. And it's not neutral now as long as price remains above 23,557. So no real, and on the daily charts out here, we go back to flip it back to the daily. What you're going to see is prices above resistance on everything except for the TF, except for the Russell 2000. 1526.20 to be exact is the number that you would want to be paying attention. Let's go out to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Hello, Steve.
Hello, Ron. How was your Thanksgiving?
Oh, really, really great. I hope yours is nice. 81 degrees here in Denver yesterday, and today it's snowing.
Oh, is it really? Snowing actually in Denver or just in the remote?
It's just snowing in Denver this morning, but it was 81 yesterday.
Wow. Wow. That's crazy weather.
I had two questions. You were just talking about the Russell 2000. But when we look at an ETF, are we looking at the IWM or the QQQs when we look at the Russell 2000?
That would be the IWM if you were to look at the Russell 2000. Are you in that position? I mean,
yeah, I've got a spread on. I own the 148s. I sold the 152s.
Okay.
And,
okay.
And for December 15th.
So, from an IWM perspective out here, very similar to what I looked at inside of the equity futures contract. Today, it also formed a brand new profile level. So it's hit resistance here today, and that is at the top of its box. It's 151.77. A close above that, and this is also a bearish structured profile out here. A close above 151.77 would be very bullish. It would say that prices are going to continue running higher. You might say how much higher, and I would suggest over time. Does not necessarily help you with this trade here, but 188.48 is on its radar, and that's a confirmed longer term A to B equals CD to the upside inside the Russell. Hey, Ron, I see we're just about to go to the break. Can you hold on?
Sure.
Okay, if there's other questions that you've got. I think you've got one about like.
Well, with the IWM, I'll buy back the 152 and put it out to 154.
Okay, well, we'll come back to Ron in Denver where it's snowing when we get back from this break. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today.
With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Ron in Denver, and we're just trying to rip apart here the IWM. And Ron, I'd just like to explain to you just a little bit further what it is that I'm looking at, so I can give you the longer-term picture, and obviously I gave you the parameters of what you're looking at, but the thinking out here. And so before we went to the break, I gave a figure of 188.48. And that's a longer-term monthly A to B equals CD pattern, which was actually confirmed in November of 2016. And when I say confirmed, I'm looking at the swing point from June 1st, 2015, which was at a high of 129.10. And on that month, during that month, the IWM did 669 million shares. When that level was taken out, it was with a wide-ranging bar, and it was November of 2016, and about 50% more volume, 901 million shares. So what this monthly chart is suggesting to you and I is that the IWM's price target over the longer period of time, it's a monthly chart, the one-to-one is 188.48. I've studied these A to B equals CD patterns, thousands of hours inside them, and I would suggest to you that that is not really the target. 214.28 at a minimum is more likely the target longer term with regard to Russell 2000. Ron, maybe the Russell 2000 knows that that the tax legislation is a foregone conclusion, and that it is going to perhaps be one of the largest beneficiaries, not certainly from repatriation, but just simply with regard to, a reduction in taxes. And probably the Russell 2000 type companies are the ones that would really use that tax offset to, to grow their business, things of that sort. I can just tell you the longer-term chart pattern looks very bullish out here, and looks like it has quite a ways to run to the upside. The weekly chart this week, Ron, as long as it stays above 150.68, That is the top of a weekly profile out here. There's nothing bearish about it as well. And from a daily perspective, what you're doing today is you're pushing into the November 22nd swing point, albeit, last week with a holiday week out here, you're never sure how to totally gauge the volume. But nonetheless, 14 million shares was what was done as price moved to its all-time intra-session high. And today, it's only 120, and this has done nearly 12 million shares. So we're pushing into a swing point with volume. There's nothing here that says that today is a blow-off or anything along those lines. So, again, a move above or a close above 145.95, everything continues to push to the north inside the IWM.
I appreciate that. I was wondering if you could just I was taking a look at Celgene, is maybe taking a long call position on Celgene, CELG.
Okay.
How does that look?
Pretty much horrible, as you know.
I know it got crushed.
It did get
crushed. Is it best to stay away from it, or is there? Yeah.
You're in kind of this, so so I appreciate the question for sure. Let me just throw it up on my other charting system just in case there's something that jumps out at me, and the answer is there's not. So here's the information that we have to go with. You use the word crush, and you're absolutely right. And the most recent crush came on October 26, 2017, when there were 69 million shares to the downside. Now, there were folks the day before that bought into that equity between 119 and 121. And I'll bet each of them were scratching their heads that next day when price got down to $94. That's a pretty decent haircut in one single day. So what you and I know is all of those people, you would say, it's kind of metaphorically, that bought on October 24th, they're just praying to get their money back inside this equity. So what we don't know is how that's going to play out inside this large gap out here. Now, from a daily perspective, as long as this were to stay above 103.36, then I can make the case where it runs to 110.34. If it were to close below 100.08, then it runs down to 99.81. Those are the best numerical references that I can provide to you so that you can try to determine a trade scenario to see if it's worth the reward risk, from your standpoint.
Appreciate that very much, Steve. Thank you.
Yeah, no problem. Anything else I can do for you? Ron? We got Ron?
No, thanks. That's it.
Oh, perfect. Okay, all right. Well, do you know what's the weather going to be like tomorrow in Denver? If today it's snowing, yesterday was in the 80s. Did you say 80s? Oh, I think we lost Ron. Okay, not a problem. So I think we've covered the Russell 2000, and that was good because, quite frankly, Russell 2000 is the one for us to keep an eye on because it's the one that's providing us, in essence, with the most profile type information that we have out there. Let me just take a quick peek and see if there were any emails that were sent in, and the answer is, give me a second here. We do have a couple. So we've got one from Bill Gates. No, that's probably not. But Larry is writing in. Let's see what Larry has to say. Could you discuss TAS profiles showing support or resistance on multiple time frames for the XLP? I absolutely can for you, Larry. So let's go take a look at the XLP, consumer discretionary sector out here. That's not the page. There we go. So we're going to punch up the XLP, and we're going to take a look at the market profiles for Larry on the daily, the weekly, and the monthly. So here's what we know about the daily. You can see that price is well above any daily profile out here. Now, this profile, most recent one on a daily basis, Larry, that formed on the trading session November 16, this formed below price action. That's a very bullish message out here. When you have price that forms and it's above this actual profile, which as you can see is a bearish structured box out here, it's actually a very strong message out here. Now, what does that mean? Well, in the case of the daily chart, you just simply go to the next swing point. So it looks like on a daily perspective, what the XLP, Consumer Staples, is communicating to you is that it wants to make a run for the 55.78, 55.50 level. That's what the daily chart is communicating to us. The weekly chart says, hey, we're up at resistance right now. We've been at resistance for the last 3 weeks. Resistance being the top of its profile box, 55.11. So 55.11, actually a couple weeks ago you hit 55.11. Last week you hit 55.11. This week the high so far has been 55.01. So what you and I know is 55.11 is a pretty good level of resistance. If you see a close above that, then the weekly is communicating to you that price is going to go ahead and likely make a run for its highs. Its highs going back to June 5th in the 57.36 to 56.52 area. That's what the weekly profiles are communicating to us. Volume-wise, a couple weeks ago, up with 45 million shares going against 47, which was a downdraft. So that's pretty good. And last week, holiday week, I don't know how to gauge that volume, 30 million shares. We'll just go with the week before. Not too shabby. 55.11, Larry, is the number you want to watch. On the monthly basis, you've got a profile that formed out here 2-3 weeks ago. Bullish profile. We're inside it. This says to you that over the long haul, the XLP wants to make a run for 56.62. And I think you want to go short the XLP, if I'm not mistaken. I just have to tell you, I'm on the long side of that trade. Steve Rhodes with TFNN. Hope that helps you out, Larry. Have a great day. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 162. S&P is up 16. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How was your Thanksgiving?
Steve-O, it was terrific. Great family activities. So I'm pretty damn thankful. So thanks for asking. How about you?
Good. Yeah, no, it was nice. It was nice to sort of have a 4-day weekend, so to speak. And I'll look forward to next year's 4-day weekend.
Yes. So here we are. So, by the way, thank you for navigating this relentless bull market in equities. And I recall just, I guess it was yesterday on the Tom O'Brien show, you happened to share the idea that December has a very strong tendency to be an up month. So maybe the buyers yesterday were lurking and acted on your thoughts this morning.
Time will tell, huh? You know.
Yeah, well,
we're in this market. We're only good as our last deed. That's typically like the last half hour.
Yes. Speaking of deeds, Steve, I would like to ask if you would focus, please, your work and scrutiny upon silver futures. Just to let you know, of course, December silver futures has been the contract we've been trading, and we're right amidst the roll from December to March. So I will tell you just for full disclosure, and I posted in the Tiger's Den, it was 30 minutes ago, I took a stab at going long silver right at these current levels. And I'm using the March contract just for your information. And
Sure.
It would merely say if people are using futures and thinking about silver starting right now and any time the next days,
Yes.
the March contract is what you need to use because we're rolling out of Dece in earnest right now. But we broke them. We broke them today. Is there any reason that you can see to lead you to think today's flush could bottom out quickly and form a low? That's what I'd like to see your thoughts on, please.
Yeah. So the answer is first, I like the trade, and I especially like the trade for someone like yourself because the price of silver and the move down today is really up against the wall. So you talked about we're rolling over from December to March, and this is an especially good time of the year to use my little synthetic contract for, in this case here, the silver. And if you look at the very right-hand panel of the charts that we're looking at, the 4 different chart time frames out here, what this shows us is that there should be very good support at 1678. The actual low that we saw so far today was 1682. To me, that's a darn good risk reward if you're going to go ahead and take the long side. Now, what I'm looking at is the weekly profile, which has a bearish structure. That's why I say it should have good support. If price closes below that, you'll know soon enough that you were basically wrong on the trade out here. But it's a bullish structured box because the bottom of that box is closer to the center of the box is closer to the bottom versus the top. And this box now, it formed in between the last weekly profile. So 1747 may be a significant resistance area. I don't know. What we do know for taking a long trade is you would not want to see price close below 1678. Then it would say it's kind of risky. Now, what you'd also like to see, and again, it's our numbers may be slightly different because you're looking at the March contract. On my little synthetic contract here, seeing price close above 1694 on the daily chart would suggest a move back to 1730. So you're looking at the 1730, 1747 trade. What I like about this is very much like gold on a daily basis. We have our third, in essence, higher low since the October 6th low that's out here. So you still have lower higher lows out here, so that's good. What you don't have, that gold does have, is higher highs. So silver is, and folks, if you look at this chart out here, I'll just simply draw a couple lines. Whatever color comes up is whatever color comes up. It's green. Here's your, in essence, your higher bottoms for the most part. And then you can, whoops, I don't know why that didn't take, but let me do this here, and you're going to see this little rectangle that is forming at the moment. And the cool thing about these patterns is that when they do break, or should it break, you can go to the base of this wedge and determine what the anticipated measured move is. So it looks to me, I can see why you would take the trade, and it makes sense to me. But it's all really coming from the weekly chart. As I take a look at silver. Is there another time frame that you would need me or like me to take a look at to provide you with anything?
No, Steve, that's very helpful. You can read on the Tiger's Den the trade that I posted with my entry on March silver and my stop loss. And what do you know? My stop loss is under that 1678 mark that you mentioned.
Perfect.
Not much.
Perfect.
It's very weird how that lines up. I can't. Either I'm reading your mind or something, but very fascinating.
More like John Logan's mind. I'm just the narrator here. Of, you know,
well, that too then.
Of what the profiles are telling us. But so I definitely see the trade out there, and you're trading the futures market. So folks, if you were just going to trade one of the ETFs, you're going to end up taking on more risk than John is in this trade, and that's really the beauty of being able to trade something like this, especially when, you know, I something went off on my phone. I think David White posted in the Tiger's Den that Kim Jong-un, you know, shot off another rocket. I don't have any details on that or what have you, but you would think that the metals market, you know, might respond. Now, interestingly enough, it really hasn't. And I was posting inside the den, you know, if you go back and take a look at the last several times that he had shot off rockets, I thought, man, this guy is long gold, and that's why he's doing it. Because metals had nice moves back then, and as of right now, we aren't seeing really much of a move at all inside of the metal. So, but that's
and I'll just elaborate.
Yeah.
What's drawing my attention today on probing for a silver bottom is this idea. We're right amidst the roll from one active futures contract to the next. In this particular time frame, we're talking December to March. Yeah. There's a window of time that starts with the expiration of options on those futures, and that expiration was yesterday afternoon. So that's the start of a window, and then the window extends through first notice day, which is the first, and that comes Thursday night. That's the day in which bullion is, or notices of bullion to be delivered against outstanding futures occur. So this is the bullion delivery window.
Yes.
And then, and the window closes maybe 2-3 days after that first notice day. So in that window of time, as just being a student of the markets, I have noticed a tendency, and it's not 100% clearly, but a tendency nonetheless, especially when speculators are heavily long silver futures like they have been for a couple of months, for a bit of
John,
selling
we're just about to go to break. I'm sorry to cut you off. We're just about to go to break. We'll be right back, folks.
Okay.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. It's that time of year again. The TFNN Salvation Army Tiger Dollar Holiday Sale is back. Through this Sunday only, you can get a 25% bonus on any Tiger Dollar purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. This sale only comes around once a year and is one of the most rewarding promotions we have. Tiger Dollars are a great way to add extra savings to any TFNN product or service. Whether you're considering signing up for any newsletter or workshop in the future, or you're already a subscriber, Tiger Dollars offer an immediate savings on any TFNN newsletter, webinar, workshop, or Master Trader series. And they never expire and are fully transferable to friends and family. For all the details and to take part in this special promotion, visit the front page of TFNN.com before this sale ends Sunday, December 3rd. And happy holidays from TFNN.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, we're on the line with John in Philly. And John, sorry about that. We were cut off before we were going to break, and I wanted you to go ahead and finish your thought, which was helpful to our listeners and our viewers out there because of a pattern that you have identified between options rollover and delivery, which is the cycle, in essence, that began yesterday. So would you be kind enough to finish that thought?
Yes, thank you, and I apologize for not hearing the...
No, that's okay. I didn't hear it myself.
Coming up.
Yeah.
Yes, just to finish the thought, in studying these markets for quite a number of years now, I've noticed a phenomena whereby, especially when speculators as a group are quite significantly long silver futures, and that is the case presently, and have been for several months, that in through that window defined by options expiry and just after first notice day for bullion delivery against futures, that there is a tendency for a sell-off to occur and a bottom to form right as that's happening.
Yeah, and that sell-off would have been a few days ago, last week, November 20th. Do you think that was the signal when there was that big flush? Let's say I knew that happened in gold. I think in silver too, but is that what you're looking at?
And today we had selling here in the past 6 hours, in which the price broke below that low of November 20th.
Yes.
Which leads me to look at those prior lows. Noticing we've made higher lows thus far anyway on that weekly chart, saying, this is a candidate for an end of a sell-off. Candidate only, no proof yet. but that's what's drawn my attention. This time frame, this price action, those higher lows.
Yeah, and
So,
it's nice that you've got that. Just another piece of confirming information to say that that's a very valid conclusion, especially when you know that pattern. Taking a look at that weekly market profile. So I think that helps you. Another thing, that I think is something worth noting out here, and I'll just switch over to gold if I can, and that's taking a look at the February contract now, and it's the same on the December contract. And so we know that in the case of gold right now, it's making these higher lows, so that's good. It's in essence been making, to a certain extent, higher highs as well. But where my mind is really focused, John, is on the very bottom panel, which is the price oscillator for gold. Take a look at the difference between the 19 and the 39-day exponential moving average, and that ratio, that formula, is right now at or near the zero level. It's really just below zero. Now, what that tells me is that my little red line, that's the oscillator unchanged line, that's a level where when price is trading at it, the price oscillator is going horizontal. And if gold is going to take off, because you posted a question yesterday, what we're going to see over the coming sessions, I don't know if it's tomorrow, if it's this afternoon, if it's Thursday, I just know that over the coming sessions, we should see price and that red line, which is at about the 1287, 1286 and change level, we should see price and that red line come together and perform a test. And if it acts like a trampoline and moves off of it, what it will do, it'll drag that price oscillator up above the zero line. And there's nothing more bullish than a rising price oscillator above zero. The last time that we saw that, now this is not about trying to catch the very bottom of something. You're just looking for, and I'll call it kind of a momentum move, but it's really a bit more than that. But the last time we saw that, we saw inside of gold right around July 31st, when we saw that price oscillator get to zero. The test took about 4 days later, which was on August the 4th. Price came down, basically closed right on that line, and then 3 days later on August 9th, it was off to the races, up to the most recent highs in the 1360 level. If we get that same pattern that forms out here, we should see gold get back up to that 1360 level. If it fails, and it gets below or closes below that red line level, and then maybe below that rising price channel, then it says we've got something else that is in effect out here. But at the moment, we have to go with what we know, and it really supports, in my opinion, the conclusion that you are drawing. And when we look at what's going on inside the Japanese yen, this thing has broken out above prior resistance. Today was a test of old resistance. That tells me that's become new support. So everything is really lining up with, I think, something else that you shared on Larry's show, maybe it was last week, where, and maybe you can expound on that, where this time of year, we're not there just yet, but in December, you've noticed what about gold?
Yes. In the 6 preceding years, or 5.
Yeah.
16, 15, 14, 13, and 12. Yes, and 12. Each year consecutively, gold formed a tradable low between December 1st and December 15th through 20th.
Okay.
And then rallied to some extent into the first quarter. So we've got that seasonal phenomena ongoing, which I always pay attention to. Guarantees nothing, but it's
Sure.
worth paying attention to.
No, absolutely, and I think with everything that we're seeing right now, that's a gift that you're like. It could turn out to be a chunk of coal, all right, but it's got all of the setup in place right now. And folks, all you have to really do is, when we take a look at that last chart that I showed, is just wait for the confirming signal, and then it should be, if it's like the prior years, as John has pointed out, it should be off to the races for a while. So, I want to thank you for sharing all of that with our listeners and our viewers out here.
Steve, thanks so much for your help on that silver. I appreciate that, sir.
Hey, no problem. Thanks for calling. Have a great day, great week.
You as well. Thanks. Bye.
You bet. So we got the Dow up 152, S&P's up 15. So no real, again, I don't know what the news is. You guys can look all that stuff up. I'll do that in about 11 minutes or so. Just exactly what this rocket firing was inside. Now we can see the immediate reaction inside the market. It was really inside the NQs where there was the biggest reaction out here. Now price was already moving higher, doing with less relative energy. You can see that little bar out there. So it was already doing its thing now. That's where the biggest reaction has been. Not much of a reaction. Prices come down into support, which is the bottom of a market profile. There's a new one that is formed here as of 1:30, which looks like it is at about the 64.10 level out here. So that should be support inside the NQ. If it breaks through that, then there's more reaction to follow. If we take a look at the NQ over the past couple of days out here, we've seen where it has slowed down by forming these, formed a doji candle yesterday. Now, doji candles, for the most part, don't mean a thing if it ain't got that swing. And that swing is you've got to be up at resistance. Well, the NQ is not really at resistance out here. Resistance means something on the left-hand side of the chart, whether it's a prior swing or whatever it is, because yesterday inside the NQ, intraday was a new all-time high. Now, what we know about today, or what it looks like is going on today, is we're going to see a Tom to mark, a TD set up 9 count. Yesterday was 8. Depends on the close today, but looks like this will be number 9 out here. Maybe this is going to be doji number 2. It just means that it's tired. And let's face it, after taking a look at that weekly chart, that daily chart inside the NQ, it's been hauling us to the north side, so it should be tired. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Hey, folks, I don't know if you can hear me. Hopefully you can. Apparently, the North Korea took out our Skype line out here. So, look, for the last 2 minutes, here's what it is that we're looking at. We're seeing the market certainly respond to something out here. I'm going to go with North Korean missile. Dow's still up 122. S&P is up 12. What are we going to be paying attention to? I would say pay attention to the following things. One, pay attention to the spot volatility index. The 50-day exponential moving average is 1049. Now, this is a line chart that you and I are looking at. So we're just looking at, in essence, the closing price. And this is a very small divergence that has really just formed today. So the day is not over. It really depends upon today's close, tomorrow, and so forth. But if, in fact, the spot volatility index were to close above 1049, that could say there could be some price erosion. Is it a big top out here? No, I don't think so. Not now, not just yet. But if you were to see it close above 1049, that would be the message that you could see some additional price erosion. Testing and rejecting, meaning staying below 1049 out there, it was nothing more than a test of resistance out here. So that, in essence, is what I'd be watching for. If I look at the advanced decline oscillator readings, you're still bullish inside the New York Stock Exchange, still bullish inside the NASDAQ Composite, even with it underperforming. Quite frankly, right now, the Dow has been bullish, has turned bullish. So, folks, stay tuned. Sorry for that little technical difficulty. But your favorite polar bear in mind, David White, he's up next. Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. Have a great Tuesday. We'll see you on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.